Hello and welcome to the Patient Swing Traders YouTube channel. We are thrilled to bring you another informative video tutorial session where we will be delving into the exciting world of stock analysis and research. In our previous video sessions, we specifically decided to provide you with a foundation for investing and trading as a long-term journey endeavor. We've covered the basics with you to prepare you for this phase of our series. Today's session promises to be a thrilling experience as we examine Enphase Energy Income, or ENPH, for a possible long swing entry position. If you are new to our channel, we highly recommend checking out video session number 3 for detailed instructions on how to set up your trading platform. In today's live assessment, we will be showcasing how the indicators work in providing valuable insights and clues during market analysis and research. Disclaimer: please note that our swing trading tutorial videos are for educational and entertainment purposes only. They do not constitute investment advice or recommendations. Please seek professional financial advice before making any investment decisions. Remember that all investments carry risk, so only invest funds that you can afford to lose without affecting your financial stability. Keep in mind that investing should be a long-term strategy and always consider your financial goals, risk tolerance, and time horizon before making any investment decisions. Let's use this video series to learn and improve our knowledge of swing trading, but always invest wisely and responsibly. Now that we've covered the rules, let us proceed. Our featured stock, Enphase Energy Income, or ENPH, experienced a significant downtrend in early March after giving up all its gains from January and February. Through a thorough examination of our previous Fibonacci retracements, we identified this major downturn and proceeded to explore the fundamental aspects of the stock. The yellow arrow identified the start of the downtrend in early March. We discovered no significant areas of concern, and therefore concluded that the sell-off was a result of investors' sentiments. In today's session, we will be using a combination of timeframes, including the 4-hour and the daily, to filter out any day trading noises, while also utilizing the 30 and 60-minute time frames to pinpoint our entry location. Join us as we navigate through the indicators and provide you with valuable insights on how to identify entry and exit points. When analyzing a chart, traders and investors use multiple indicators to gather data and make informed decisions on the direction of a stock's price action. It's important to note that all indicators must be in sync at the time of decision-making to ensure a successful trade. Any divergence from any indicator signals for a wait-and-see period until a better opportunity presents itself. Adherence to a predetermined plan is highly recommended to mitigate risk and increase the chances of success. As a swing trader, it is important to confirm a bullish trend momentum before entering into a long swing position. To confirm a bullish momentum, there are several rules that must be followed while you are assessing the stock. Starting with the upper part of the chart in your trading platform, the following activities must be observed. 1. The candles must be below the VWAP at the lowest point. The red line represents the VWAP. 2. The candles and VWAP must be below MA21. The blue line represents the MA21. 3. The candles, VWAP, and MA21 must be below MA50. The yellow line represents the MA50. 4. The candles, VWAP, MA21, and MA50 must be below MA200 at the beginning and throughout the consolidation period in the demand zone. The white line represents the MA200. 5. The purple arrow identifies the consolidation's action taking place in the demand zone. This area is also known as the support zone. 6. An engulfing candle followed by a confirmation candle, identified by 2 green arrows, must be observed. The VWAP and MA21 crossover must occur between the engulfing and confirmation candles, as shown by the yellow arrow. Once these criteria are met, the upper chart indicators confirm a strong bullish trend. Moving on to the lower part of the chart, starting with volume. The following activities must be observed. 1. The volume, which provides a measure of buyer's momentum, must be higher than the previous ones and should be green below the engulfing and confirmation candles, is identified by the blue arrow. 2. The MACD histogram must be green, above the zero line, and in agreement with volume. 3. The MACD line must cross over the signal line, pointing in an upward slope. The MACD line is identified by the blue arrow. 4. The CCI line must move from oversold and cross above the zero line. The blue arrow identifies the CCI line above the zero line. 5. The stochastic must move from oversold, and the %K line must cross over the %D line. The %K line is identified by the blue arrow. 6. The RSI must move from oversold and point in an upward slope. 7. Additionally, the money flow index, or MFI, can be inserted to further cement the strong bullish trend. The blue arrows identify the MACD, CCI, and stochastics crossovers. The yellow arrow identifies the crossover between VWAP and MA21. These 4 crossovers are the most important assessment tools and must be present and in sync to ensure the bullish confirmation trend is strong at the point of decision making. Our assessment between the upper and lower part of the chart in our model provides 14 areas that must be in sync. When all these indicators are in alignment and agreement, it presents a high probability of a profitable trade opportunity. The entry point should be at the crossover between VWAP and MA21, and the stop loss should be set at the previous low. As a retail investor, to mitigate your potential losses and increase your chances to make a profit in swing trading, it is essential and a must to have a trading platform set up for research, analysis, and assessing your options regarding any security you wish to invest in or swing trade. In addition to knowing which indicators to plug in your chart, you must learn and be able to draw the Fibonacci retracements on the platform that is being used for research. The Fib retracements were the key assessment tools that allowed us to analyze how far the bearish trend would go prior to the consolidation and bullish trend reversal. Here is a brief view on how to draw the Fib retracements following a recent bearish and bullish move. Both the recent low and high points are identified by 2 yellow arrows, and the drawing will follow. This model can work for all types of trading, including long-term investing. For swing trades of 3 to 10 days, we recommend using the 60-minute and 4-hour time frames to filter out day trading noises and minimized false signals. These higher time frames have been known to provide a more reliable source of data collection on buyers' sentiments and can provide traders with better results. We also recommend using the 30-minute time frame to identify entry points once a bullish trend has been identified and confirmed. Remember, discipline and sticking to the plan as described above are some of the key components to helping you increase your chances of success in your swing trading journey. Now, taking Enphase Energy Inc. or ENPH, as our featured stock, we observed a bearish trend since the beginning of March, with the stock losing all its gains from the months of January and February of 2023. Our analysis of previous Fibonacci retracements confirmed that the stock had declined over 138% from its recent gains. However, after examining the stock's fundamentals, we found no major financial headwinds or earning concerns that could have caused such a sell-off. Therefore, we concluded that the sell-off was likely due to investors' sentiments and that ENPH was worth considering for a possible long swing position. To filter out day trading noises, we decided to use the 4-hour and daily time frames. Additionally, we would use the 30 and 60-minute time frames to pinpoint our entry location. We used that exact entry point to enter our long position at $190 on March 20th. We were successful in this trade and we exited our position at $214. Our stop loss was set at the previous low. By examining the fundamentals of a stock and using various time frames to filter out day trading noises and false signals, traders and investors can find opportunities in stocks like ENPH, even during bearish trends. When you look at the chart, we specifically marked each key areas with an arrow for your observation. The areas marked are 1. The consolidation area, also known as the demand zone, and the support areas where buyers come in looking for long position is marked by a purple arrow. 2. The engulfing and confirmation candles are marked by 2 green arrows. 3. The VWAP and MA21 crossover is marked by a yellow arrow. This is the area where the entry points are pinpointed and long swing positions can be entered. 4. For the lower part of the chart, the volume, MACD histogram, and the crossovers of MACD, STOCH, CCI, RSI, and MFI were all marked and identified with blue arrows. Finally, we identify the areas to exit and take profits with red arrows at the areas of the supply zone, also known as resistance areas, where sellers decide to sell and exit their positions. These markings can be used as reference for comparison of future research. We recommend you study the model well and practice with your paper trading account to master it for your trading and investment journey. We hope you found this video session informative and helpful in understanding the basics of identifying possible entry and exit point when you are assessing a stock for trading or investing in your portfolio. If you enjoyed this video, please consider giving us a thumbs up and subscribing to our channel for future video tutorials. By subscribing and hitting the notification bell, you'll be notified of our upcoming videos where we'll be discussing money management and how to avoid emotional trading. Thank you for watching, and we look forward to seeing you in the next session.